Hello and welcome to Currency Point, presented by me, Evan Lucas, for FP Markets. As always, please have a very good read through of the disclaimer on screen. Everything in this video is general in nature. None of it should be relied upon as any form of advice. FP Markets does not know your personal scenario, nor your personal financial goals, and therefore none of it should be relied upon as any form of advice at all. It is just general in nature only. Apologies for missing last week. I had a little bit of a technical issue, and what I would have probably led to is actually done a quarterly review. And I think we really need to do that because there is a discrepancy between equities and FX. There's also a discrepancy between fixed income and equities as well, but I want to leave that to the one side because why I want to point that out is that I have been really strong talking about the US dollar and having a look at the last quarter, looking and judging and watching what's been going on, you'd think the US dollar had an incredible quarter. As a basket, it did not. It was up 2%, which when you think about how hard and how fast the steepening of the US yield curve happened, how strongly upgraded their growth forecasts were, all of their general markets data was also incredibly positive. All that put together, you would have thought it would have done better than what it did. And again, further perspective, if you look at what happened in the second half of 2020, where it fell 9%, still at a very low base in terms of where it sits. So all of those together is an interesting scenario to say, why is the US dollar not going further ahead than it already is? And is there a takeout from that into Q2? I think it's also a little bit remiss not to actually look at things on a pair basis. So the one that I've been really strong on for good reason has been dollar yen. It is very much almost a pure play on that yield steepening. It was up 7.5%. Not surprising, it's a massive funding source at the moment. And that I actually believe is a trend that's likely to continue. I think if you look at it, range for the second quarter will be 107, even as high as 114. If it falls down to the bottom end of that range, certainly liking the dips and buying into it. And the other one is the euro. Also funding source, but again, you've also got to probably put down to the fact that its handling of COVID has again pretty been tepid. We're into a third lockdown. Their vaccine rollouts haven't been great. So you did see euro dollar down about 5%. And I think that trend is also likely to continue. The euro is a good funding source. The ECB is unlikely to do anything to change its current position, considering the European Union's current standing on COVID and their growth outlook. So what I would probably there, again, looking at the ranges, 114 to 121. If it gets towards 120 handle, I think I'd be probably a bit of a seller of that rally and looking to get down. But overall, what I'm also saying here is that why didn't the dollar basket go harder? And it's probably down to the Fed itself. The Fed is clearly standing very strongly, in fact, almost sort of nailing itself to the mast, that it's not going to move rates till 2023. Both meetings in the first quarter, they put that out there incredibly strongly time and time and time again, even with all the upgrades, even with all the data suggesting it could be earlier than 2023. And that probably just pushed a little bit back on the US dollar. So what does that mean for the second quarter though? I'd be watching things like Aussie US, Kiwi US and cable. They're a bit range bound at the moment. And why I want to concentrate on those is that if you start to get really good US data in the second quarter, and personally I believe you're going to, is there going to come a point when the market can actually push through the Fed's rhetoric and actually get onto the US data and back it in? I think if you saw a grouping of a sell-off in those three pairs and the US dollar started to take off, I think that's your confirmation. And that's what I'll be watching for outside of euro dollar and outside of dollar yen. Those three pairs, if they were to break together and break to the US dollar side, I think that's a significant movement that the US dollar is now likely to have a very good 2021.